So when you heard me, I hadn't heard the second part of it. It's the rate cut per se, the traditional let's cut rates if there's signs of a weakening economy. And I also heard what you were saying at the end of the last segment. I think that's really important, the context. There's quite a lot of evidence that QE and lower rates to the levels that we're at here in many other countries have not worked for years. Certainly in '08, it was the right response. And they almost definitely have added to, by supporting financial markets, this inequality issue. So I think you're very right. And then, so even, you can't do things and just assume nothing else is going on. But in particular, if we are now trying to encourage people to stay at home, not travel, what on earth is a rate cut supposed to do? It's not, other than possibly sow fears amongst the community that watch this programme that what do these guys know that we don't know, and how much worse is it going to get? We've already seen that with the Federal Reserve Board's move a couple of weeks ago. So the rate cut part strikes me as a mistake and too soon. Because they might need these bullets if demand does get a lot weaker than it's been in coming weeks. And we're now at 25 basis points, and so you know, where can you go? The second part of it, in terms of making it easier for banks to extend credit, particularly to small business, and to consider supporting firms with what we might get from the Chancellor later in the budget on so-called payroll holidays or tax holidays, that is important, and that does make sense. But the rate cut, not in my view.
Jim, I take your point on timing, and we have seen effectively what can happen in China with restrictions and lockdowns in Italy, right here in Europe, on our doorstep, and maybe in coming weeks that might be a situation, who knows, we could face and across the rest of Europe.
I mean, essentially the Chinese have, it looks from the data we got for February, the Chinese have deliberately, effectively, cut their economy in half in 1 month.
But does this look like a shock and awe package if you consider all the different measures? The Fed moving, now the Bank of England, we've got ECB tomorrow, we've got a budget today, we've got more measures coming up from the European Parliament soon, and maybe something that forms a stimulus package from the White House.
Well, I'm taking it for granted in the next 2 or 3 days we are going to get fiscal measures all over the place. And if for whatever reason we don't, then that would be very troubling. Linked to what I've already said, that the monetary impulse for quite a number of years, in my opinion, has been clearly much weaker than it would traditionally be, partly because of where we are with the absolute level of rates. What the world's been crying out for in the 12 years since the crisis is investments. Private sector investment around the world, around the Western world in particular, has been exceptionally weak. And public sector investment has been too, because we've had, in many places, an almost obsession with reducing government spending, epitomised in the centre of the Eurozone with Germany, here in the UK. And I think the appetite for shifting away from that was there anyhow. And I would suggest the coronavirus gives governments a fantastic excuse to be much more imaginative and flexible about some of these very rigid fiscal rules that we've had. And I hope not too high expectations, but in a few hours' time, we're going to see the first of that in the UK budget. And looking at the briefings that's been going on to the domestic British media the past 24 hours, you know, they're clearly sending out a message of a big rise in investment spending that's coming. And I've been pushing for that for quite some time, particularly as it relates to the north of England, and that is highly, highly necessary in a number of parts of the world. It is what the Eurozone is desperately crying for from Germany. And if you look at the forces hitting Germany with the collapse of Chinese demand even before this, the whole thing about diesel cars, Germany has been far too dependent on export-driven model for the best part of my life. And they have a ridiculously strong fiscal position. What more do they want than to unleash the taps along with their G20 neighbours? And some version of what we had in '08 about a big fiscal response, it seems to me, is an absolute must in these circumstances, and especially because they can do some targeted things to make it easier, particularly for small business, to cope with what we want from a health prevention perspective of being more isolated and not all of us infecting each other.
What are we, about 85% debt to GDP, I think, here in the UK? I mean,
in that vicinity.
The healing from the financial crisis, some would argue, has not properly taken place here, and yet we seem willing to be piling further debt on top of that, because I'd imagine that we won't get major moves on tax hikes today from the Chancellor as we get an expansive budget on the spending side. Are there not some risks contained in that with regard to where the pound goes and how economies perform?
Clearly there are medium-term risks from sort of negating some of the reasons why this government and others have tried to reduce debts and spending in the past decade. But one of the underlying premises of why you might reverse it is to actually engineer a much stronger domestic economy, so that simultaneously kicks into what economists would describe as multiplier effects, and you get a much bigger corresponding rise in receipts. Supply side, as I'd call it, Laffer type economics. But we need something to cut this break. Private business is not investing anyhow. We live in an environment linked again to your really powerful points before I came on air, where for the past 12 years, the single biggest buyer of equities has been companies buying back their own stock. I mean, that's kind of pretty ridiculous too, in my opinion. And we need to break some of these things and do something to engineer more of an investment-driven economic recovery involving both private and public sectors in many, many economies. And in a strange way, perhaps this coronavirus shock gives policymakers the cover or the pressure, perhaps, to get out of the rigid boxes that we've all been conditioned by for so long here.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.